30-second countdown. Hey there. Oops. Hey there. Welcome to In the Know with Robbie Coe. Let me start it off in a different way. Let's just do that. Welcome to In the Know with Robbie Coe. I'm really excited. This is episode 2 of this season. We're talking about real estate at this particular time. And I got to tell you that wherever I go as a real estate agent, I'm hearing people talking about real estate, whether it's related to affordable housing, mortgage interest rates, new loan products, 203K loans. A lot of people are talking about that right now because for some, there have been some challenges in getting a property under contract because some say, depending on where you are, that there is a shortage. Today, I have a fantastic guy, a real estate professional, a mortgage loan officer at Cross Country Mortgage with us today. Mr. Teddy Pendergrass II is going to be our special guest today. And I got to tell you, I met him the first time last year at a real estate event. And I can't tell you enough how totally impressed I was with him, his work ethic, his knowledge, and he seems like a really great guy. So I want to welcome, welcome Mr. Teddy Pendergrass to the show. Hello, dear sir. Let's try it this way. I like that one better. How are you today?
Oh, I'm fantastic. How are you guys doing today?
Fantastic. I'm really excited to have you here today. I want to thank you very much for agreeing to be a guest of this show today. Now, we're going to be together for about an hour. And what I'd like to do
Okay.
is let you take an opportunity to tell people about yourself. What makes you the go to guy for mortgages in Philadelphia or Pennsylvania, for that fact of the matter?
Okay. First of all, that's a great question, Robin. Thank you so much for. First of all, thank you for having me. Excited to be here for sure. I guess from a mortgage perspective, I've been for one by trade, I'm also an accountant, financial advisor, and I have like 7 licenses. So that's fun, right? However, what's important to the clients most of the time is that whether you're a business owner or whether you're someone looking as an investor, we have a plethora of products that we have at our disposal. And really, at the end of the day, I tell people all the time, you're really only as good as when you're applying for the loan as the team that's going to be handling your loan and making sure you guys get to the finish line. Because there's a lot of great companies, right? But from a team standpoint, I know we're second to none.
Now, can you repeat that because it faded out on my side? The last thing you said, as far as the team is concerned.
No, yeah, I said as you're really only as good as the team that you're working with,
Mhm.
because there's many good institutions that you can put your business through. I will also say that as far as cross country is concerned, we are a company that believes in getting the deal done. So what does that mean? That means we have the ability to go down to a 500 credit score for FHA, which I know a lot of companies don't have the ability to do. Sure, we love our 800 credit score and $500,000 in the bank clients.
Mhm.
However, not everybody is like that, and everybody has a different story. So, my job at the end of the day is to find out what your story is, and then really work like a doctor and put things together. That's why I've been, I consider myself a lifelong learner in that sense because when it comes to putting together a deal, especially your home or your investment property, or you're going from hard money into looking for a long-term solution, or whether it's you're looking at going from personal, and then you start to look at commercial deals, things of that nature. I always make sure that I have the proper outlets to try to help my client, because at the end of the day, it's about helping the client.
Okay, so that's good to know. Now, tell us what's going on in the market. There are some people who are sitting on the sidelines looking in, saying, "Hey, I don't know if I could jump in or not." Tell us what you're seeing.
Yeah, well, the same people that of course, as we know, over the last 18 months, interest rates have gone up from
Hmm.
3%, 2.5% to where they are now, 6.5 to 7.25, and they've been bouncing in that range, for a while, over the last few months. And some people initially, they think that it's going to go back to 3%. It's not going to go back. This is really business as usual in terms of from an interest rate perspective. And again, some of those clients who have waited are now starting to get back in the game, because they realize this is really normal,
Hmm.
as far as that's concerned. Um, yeah.
So I know that every now and then, when this comes up, I tell people that my sister, my older sister, bought a house. I'm going to say in the 90s, maybe 1991, 1992. Her interest rate was over 13%.
Yeah.
It was 13%. I remember being a young girl when Ronald Reagan was the president. It was over
Mm,
15% interest rate
yeah.
for some mortgages. So there is a reason why the interest rates went down to 3%, 2%, or whatever it was that some lucky people were able to get. I don't want to use this video for that, but I could talk about it. But I just think it's important for us to reinforce that now is a good time to purchase a house, and there are mortgages available for people who are credit worthy, and as well as for some people who are credit challenged. So, what would you say to a prospective buyer? What advice would you give to them to help them navigate the mortgage application process? What things should they do in advance of applying?
So that's an interesting question, Robin. In particular, because you have many uh, potential buyers at different phases. Um, of course, I always tell them, a work on your credit. That's extremely important. Sometimes people don't know exactly what they need to do or how to work on their credit. If that's the case, I will take time with the client to review their credit with them, and tell them ways that they can improve their credit, because of course you want to have your credit as high as possible, so
Mhm.
that you can of course get the best terms. That's how things always work. People with the higher credit get the absolute best terms. What I'll also say is that savings is important, right? So whatever the amount of house that you're looking at purchasing, it's great if you have at least 5% stored away somewhere for that purchase, that can go towards closing costs and or down payment. And of course, if you do not have that, that should not preclude you from looking, from seeking a qualified professional to help you. Because I tell people all the time, some people say, "Listen, I'm not ready," and I'm like, "Well, what does that mean to you?
Mhm.
When will you be ready? What are the items that you need to have in place in order to be ready?" So, um, we'll take an application. Maybe they are ready, maybe they don't know it, and we'll help them put a plan in place. Maybe it might be 3 months, maybe it might be 6 months. I have some clients that I've been dealing with for over a year and a half to 2 years, that
Hmm.
we get them to where they need to be, because home ownership is extremely important.
Well, I have to say, in regard to that, in March of this year, I went to an event down in Center City that was called Convergence. It's a
Mm,
new initiative which includes the Mortgage Bankers Association, Wells Fargo, TD Bank, Radian, and some other group that I can't remember.
Okay.
And during the presentation, uh, we learned that in Philadelphia, that there are about 22% of Philadelphians who are mortgage ready, but
Hmm.
they don't know that they don't know they're ready. They
Right.
have everything they need, they just don't know
Right.
that. They're thinking, "Oh, wow, I need to do this, I need to do that first before I can apply for a mortgage." What would you say to somebody who is interested in purchasing a house, even in today's time, at today's money, who might not be sure whether they're ready? What should they do?
I mean, really, you need to. What they should do is get an application in
Hmm.
to a mortgage professional that has access to programs, because whether or not they think they're ready, I could I could not tell you how many clients we help get to the finish line. I mean, we have tremendous. I mean, actually, Pennsylvania and many other states, but particularly Pennsylvania, New Jersey, Delaware corridor, we have great programs to help
Hmm.
people get into homes. I mean, besides the city programs, each county has their own program, which can give you, typically $5,000 to $10,000. And then sometimes you can also put together a mixture of the programs, and get, a total of maybe like $15,000. There's also other grants from local organizations as well that we can pair with those clients that may think they're not ready, but to really get them in the home from a financial standpoint, a down payment standpoint, and then also, again, from a credit standpoint. You have people that say, oh, I need to have, Wells Fargo's of the world or the Bank of America's of the world will tell you you have to have a 640 in order to give you an FHA loan. Well, that's not federal guidelines. The federal guidelines are they can you can still put down 3.5% with a 580 credit score and purchase a home.
Mm.
They can go down to 500 if you're willing to put down 10 to 20%, depending on the deal, right? So, however, again, that's kind of what we do. That's my job to figure that part out.
Okay, so I was going to ask you about the different excuse me, the different programs that your company offers to people who are first-time buyers.
Yeah.
We talked about the grant programs. Philly First Home is a fantastic opportunity
Hmm.
for buyers to receive up to, I'm going to say, 6% or $10,000, whichever
Hmm.
is less, towards the purchase of a home. If you are buying a house for $166,666.67 or more, you can get the full $10,000 for the program. Now, when you are considering whether someone can afford a property, are you factoring in that grant money before? Are you subtracting it first, or is it up front? How does that work? Or in the back, rather?
Sure. So after getting the app in and evaluating the client's assets,
Hmm.
I will also ask them a very interesting question. Understanding if they have family, that would be willing to give them a gift, right? Because
Hmm.
we need to know what access they have to capital. Sometimes people might not have it right there in their pocket, in their bank account, but they have a mom, they have a cousin, they have an uncle, something like that. So that's what I assess that. Then after I assess that, we talk about, their, really what they're comfortable with from a monthly payment standpoint.
Hmm.
Because sometimes someone might be able to afford a $500,000 home, but not want to pay a $3,800 payment,
Oh,
right? They
sure.
might they might still only want to pay $2,000 a month. If that's the case, then we I will literally back into that number to figure out what their comfortability is, how much they want to pay, and how much home they can afford,
Hmm.
or we'll just do it the other way. And we'll take a look at what their max affordability is. I'll also let them know what their payment is as far as that's concerned, and then we really I call it back into the number. In terms of the grant, the use of the grant, I will do that up front as well. I will figure out how much, again, after you figure out the type of home and the amount of home they want, then I'll piece together the grant or the grants with
Hmm.
the S to, help that client.
Okay, so in your experience, what
Hmm.
is what are maybe the top two or three things that people do that can tank their deal? What mistakes? What are the common mistakes that people make when it comes to going through this whole mortgage process?
Oh,
And
yeah.
how can they avoid making the same mistake?
Yeah. For one, pay your bills on time.
Hmm.
That's the first thing. Like, you know, don't go 30 days late on any of your bills during this process or within the year of you purchasing, because that can be a big deal, right? I had a deal just this week. We're about to close, and for whatever reason, I don't know. God bless them. They could have called me, and I would have tried to help them, but they went 30 days, and that's the second 30-day late, and it kicked them out of being able to do the type of deal we were going to do in
Hmm.
particular. So that's one thing. Um, the second thing is, yeah. So also, don't go buying things while you're under contract.
Hmm.
People decide that they want to go buy their furniture. I had a person decide that they're going to buy a new car while they're under contract and add an extra $638 on their mortgage, uh, on their debt to income ratio, and
Hmm.
it almost blew up the deal. I had to do some other things, but those are the type of things that you don't want to do. You basically, when you're deciding to buy and you're in the purchase of buying, you don't want to incur more debt. And the third thing is stay employed.
Okay, I can see
Stay
why that's
employed.
important.
That's it.
I can
You
see
know,
why that's important.
that's important. Yeah.
So I want to ask you to explain about the debt to income ratio for people who may not understand what that is and why it's
Okay.
important. But before we do that, I'd like to say that you're tuned in to In the Know with Robbie Co. I am Robin Aluco, real estate agent, insurance agent, and public notary for Pennsylvania and Georgia. And our special guest today is the all-around guy, accountant, mortgage loan officer, and some other stuff. He doing a lot of big things over there at Cross Country Mortgage on 10th Street. A beautiful office. You can see it in the background. It's such a wonderful place. The energy there is incredible. I am going to play a special message from our sponsor, Robbie Coe and Associates. And when we come back, Mr. Pendergrass will tell us all about debt to income ratio and why it's important, why we have to focus on that, and we'll get some more information right after this message. At Robbie Coe and Associates, we help business owners protect what matters most. For many years, we've specialized in working with real estate agents and investors in other service-based businesses like beauty and nail salons, barbershops, and much more. I'm also a real estate agent and public notary for Pennsylvania. At Robbie Coe and Associates, we're licensed to discuss insurance products in 13 states. We can help you customize an insurance solution to protect your assets, especially as your business grows. We educate our clients to help them make better choices because we understand your business and we want to know you. Contact us today to learn more about how we can help you make better business decisions and protect what matters most to you. Okay, so that's a great commercial. I love that. Now, listen,
Yeah.
if you want to sponsor this show, please feel free to reach out to me at Robbie, ROBI, at rko-realty.com or give me a call at 484-429-6712. We are speaking with mortgage loan officer Teddy Pendergrass II. And before the break, we were talking about debt to income and why it's important. Let us know, Mr. Pendergrass, what it's all about, because some people don't know.
Okay. Sure. So yeah. So debt to income is really your what your monthly reoccurring debt is. So There are certain ratios that's really important, right? When we talk about that, so there's certain companies that have certain what we call back end ratios.
Hmm.
Some companies can only have 45%. Some companies can do 50. Some companies, we can go up to 56.9%, which is really what I would say aggressive in terms of making sure that you qualify for the loan. Your assets, your monthly income, as far as that's concerned, basically divided by your expenses. So
Okay.
that's really what the formula is.
Okay. So something like buying a new car or renting an apartment for somebody or uh, buying furniture, anything on credit, it could possibly cause your deal to explode or implode. Maybe that's the better word.
Yeah, I mean, if you have $1,000, if you're making $1,000, and your monthly payment for your mortgage, for lack of a better word, is $500 a month, you're at a 50%, debt to income. That's your whatever your payment's going to be to your income. If you buy a car for, 150, 200 bucks, you're well over the 50% threshold
Hmm.
debt to income. That's just using a simple example, but that can affect, making those decisions last minute, or getting or running up a card with your, you go to the furniture store and run up a card and buy $2,000, $3,000 worth of furniture, and
Hmm.
that payment's now, $200 a month. That can change your debt to income and
Right.
blow up the deal. So yeah, so we have conversations ahead of time and say, listen, these are the do's and don'ts. These are the things you want to do if you are actually serious about purchasing a home.
Okay. So I know that right now there is, as a real estate agent, a lot of people sometimes have difficulty getting a deal through because they really didn't figure out. I heard you say that you can tell somebody how much they could qualify for, but the person, the applicant, probably didn't think about what they wanted as their payment. So, in other
Right.
words, I'm coming to you saying, I want to buy this house, and the house is $300,000. I'm making $50,000 a year, and then you determine that my payment is going to be, I'm just guessing, about $1,500 to $1,700 a month, which is way outside of the realm of what I even think is possible.
Right.
So, what steps should any potential home buyer go through in order to figure out that information before they get to you?
Well, I don't think they need to figure it out before they get to me.
Hmm.
Honestly, before they get to me, I think you have to have, again, I think you have to have a conversation with someone who cares enough to help you figure that out,
Hmm.
right? Our job as financial professionals is to have the so-called tough conversation, which I don't think is tough because I've been doing it for 27 years. But have the conversation and say, hey, what's going on in your life? I understand you're interested in buying a new home. Tell me about that. You know, and listen. Have a conversation, build a relationship with the client, and then ask those questions. What have you been looking at? I ask them all the time. So okay, so you already know where you want to be. Like,
Sure.
what have you been looking at online? What have you been talking about with your realtor? And they'll 9 times out of 10 people know. They're like, listen, I'm like I see something for 250. I see something for 500. And then you get the application and have a conversation around payment. Payment, what it will take to do that, and then you work to a number that's comfortable for them, and go from
So,
there. It's all because really it's all math. On my side, it's all math.
mhm.
I tell people all the time, listen, it's just math. The numbers are going to be the numbers. I'm going to help you understand them. We'll make it simple, easy. We'll figure it out together, and because I want you to be comfortable at the end of the day.
Okay, so last week on the show, we talked about with the guest that I had last week, we talked about the idea that there is a group in a different city that's encouraging people who may or may not know each other to purchase a property together. Is that something that you're seeing here in Philadelphia? Like maybe brothers or siblings, cousins, or whatever are purchasing a property together, or people who may not even really be related at all together who don't have some kind of romantic relationship? Is that something that you're seeing here?
No. Listen, I'm just saying me. I'm not saying that, because, honestly, it does happen. So here's what happens sometimes. What I'm saying, anyway, we might get someone that's not 100% qualified to purchase what they're looking for.
Hmm.
And then here's my next question. All right, well, who else is willing to go on this loan with you to help you qualify for this property that you guys are looking at? Sometimes it's an aunt, sometimes it's an uncle, sometimes it's sometimes it's a friend. Um, yeah, so that does happen.
Hmm.
But again, yeah, I'm not seeing a whole. I mean, again, if you're talking particularly about investor pools, I mean, yeah. So you do have some of these investment properties that people are purchasing and working together to either flip them or purchase them from that perspective. So yeah,
Do you want to talk about that at all? Or because I didn't mean an
uh,
investor pool. What I was just meaning was, okay, I have a good girlfriend
yeah,
and we both have kids. And we said, okay,
okay,
we're
okay.
going to just buy this duplex or buy this house together. And you got a room for yourself and your kids. I got a room for myself and my kids. And
Listen,
we just make it work.
listen. It makes a lot of sense. It makes a lot of sense. Do I see it a lot? No. Did I hear about the trend on Dateline or on television or something like that? I
Hmm.
did. I don't have
Okay.
a lot. I haven't had a lot of people do that, but it makes sense. I mean, the rental market, as you know, you have no control over that. It goes up every single year. I used to
Hmm.
hate when they would call me and say, "Hey, by the way, your payment's going up. You're going to pay an extra $100 a month." Yay! It's
Hmm.
like a year. Yeah. So, so again, at the end of the day, the benefits of home ownership, you can lock in your interest rate, not interest rate, but your payment in today's dollars.
Hmm.
Over the years, you're going to have, hopefully, have greater earning potential, and you're going to have tremendous, tremendous appreciation in value and equity as far as your property that you purchase is concerned. And that those are the benefits, as well as the tax benefits of home ownership.
Okay, so let's talk about that
Okay.
equity in the property. Now, I'm a notary, a public notary, and I always say that during COVID, that I was slinging those refinance papers and loan modification papers. Like it
Slinging
was like
loans, huh?
my phone was always beeping. Hey, we need you to go to Westchester. We need you to go to
Yeah.
some other Pennsylvania city, and slinging those refinance papers. So tell people how important it is. Okay, you bought a house. If you hope to get money out of it, the equity, first explain what equity is, and then and let people know how they got to protect the equity by making sure they keep paying their bills. Otherwise, the bank is not going to let them take money out of it if they need it for something. Is that a safe thing or fair thing to say?
Listen, it's you see the look on my face right now. You hit the nail on the head. Um,
Okay,
you
because
know,
people don't realize that.
yeah. So again, it's one thing that I said is, again, pay your bills on time.
Hmm.
Things happen, but try to do that definitely for sure. Equity is the value or the money that you have in your house. You buy your house for $100,000 every year. The value of the property is going to go up. Let's just say 2 to 5%. In some
Hmm.
cases, it might go up 8%. Just depends on the what's going on in the market. As you know, the last 3 to 5 years, we've seen tremendous growth in property values, right?
Yes.
Some years, 15 to 20% in value in that given year. But in a simple scenario, we're talking about, 5%, $100,000 loan, you know, you you put in, you buy the house for, let's just say, $8,000, all in on $100,000 property. You're getting back 5,000 in that one year just from getting appreciation of 5%. 3 years down the line, your property has gone up $15,000 in value on
Mm,
$100,000 property that you initially purchased. So that's equity that you have in that property. If we're doing rough numbers of, $15,000 in 3 years, if we're using the 5%, that's the assumption. But it could be 3% growth. It could be 7% growth. We don't have a crystal ball, but the market is the market.
so does your company provide home equity loans or home equity lines of credit?
Absolutely. Yeah.
Okay. And what is the LTV for those loans?
Yeah. So we can go up to 95% loan to value. It's back end CLTV. Um, yeah.
That's very good. I usually see 80 or 90. You're saying
Yeah.
95%?
Yeah. We have products that'll do that as
Okay.
well.
So, and I'm saying LTV, that's loan to value. Would
That
you
is,
mind explaining what that is so that people can understand it better? I shouldn't have used that
that's fine.
abbreviation.
So that means we use a simple $100,000 example. That means you can get, if you have a 90% loan LTV, loan to value, it means you can get $90,000, which is 90% of $100,000. You have access to $90,000 of basically money that you can be loaned off of. If you already have a loan, then, for lack of better words, and you owe 50,000, and it's a 90% LTV on $100,000 property, meaning you can get out, you have access to 90,000, but you owe 50,000, then it's really $40,000 that you will have access to as far as
Mhm.
the equity line is concerned. That's in simple terms. There's a few other nuances, but those are your, you know, uh, simple terms.
So, is there typically a difference in the pricing between a first mortgage and or a home equity line or a home equity loan? Is there a difference in the pricing? Is one more expensive than the other typically?
Um, funny you asked that question. Depending on the market cycle, where we are in the economy,
Hmm.
I've seen home equity lines be much lower
Hmm.
than your first mortgage. I've seen them be higher
Hmm.
than the first mortgage. Currently, right now, home equity lines are higher than the first mortgage. But again, and I, I tell people all the time, um, the market the market is always subject to change.
Okay, so thank you. You are watching In the Know with Robbie Coe. I am Robin Aluko, your host, and our special guest today is Mr. Teddy Pendergrass II, a mortgage loan officer over at Cross Country Mortgage. We're talking about mortgages, and we got some really good information about what not to do. Don't spend money increasing your debt to income ratio when you are in the pipeline for a mortgage loan. You're buying a house. That means don't buy a car, don't buy furniture, don't buy anything on credit that's going to affect the amount of money that you have to spend every month. And that a very experienced mortgage loan officer can help you figure out what your needs are as far as your payment is concerned, whether there is any kind of thing or issue on your credit report that needs to be resolved before you can move forward in the mortgage loan process. When we come back, we're going to get more information. I'm going to ask some more questions of Mr. Teddy Pendergrass. right after this message. And this is a PSA about just putting ourselves in somebody else's shoes. It was powerful for me, and I just wanted to share it with you. We'll be right back after this.
If I could be you, and you could be me for just 1 hour. If we could find a way to get inside each other's minds. Walk a mile in my shoes. Walk a mile in my shoes. Well, before you abuse, criticize, and accuse. Walk a mile in my shoes.
We're back. You are watching In the Know with Robbie Coe. We're with Mr. Teddy Pendergrass II of Cross Country Mortgage. I'm excited about this show today. It is a long time coming in the sense that I'm always doing first time home buyer program seminars for prospective home buyers. And I do come in contact with people who they know that they want to buy a house. It's something deep inside of them that, oh, I got to
Mhm.
get a house because I got kids. I want to have a backyard, all of these different things, the reasons why that a person might want to buy a property. It's all there, but there's some things that need to be taken care of first
Mhm.
before they get to that point. And so, one last thing that I'd like to ask you related to the actual loan product. I know that there are certain steps that people have to go through. I know when I was buying this house 15 years ago, one of the things that I swear made my hair turn gray was they would say, "Okay, Miss Aluko, we would like you to send us your bank statement. I just sent it to you yesterday. Now, what's going to be different on it?" Or, "Okay, when you get your paycheck, we want you to send us the pay stub so that we can see what's going on."
Yeah.
I think that that is the one thing that just made me worry because I said, "What are they checking me for? Why do they keep looking at me?"
Yeah.
But please explain why something like that might happen for a potential buyer.
So yeah, I mean, this when buying a house is it's particularly important from a banking perspective or from a financial institution to make sure that a you're still gainfully employed. It's important. It's one of the you're gainfully employed. B, your assets are there, and not only that, we also look for large deposits because it is a very important transaction, and we from a banking perspective, we have to make sure there's no like significant cash deposits into the accounts. So there's ways to make sure
I hit the
that
lottery
also.
and I'm putting that money in my bank account. I hit the lottery. What's
Yeah,
wrong with that?
a lot of lottery's fine.
Oh,
However, if you put that $60,000 hit in your bank account, you better give us some lottery paperwork.
you got to do what? What is the thing that
I
has to
said,
happen?
I said you better give us some lottery paperwork. That's all.
Oh,
We
I
just have to
see.
document everything. Everything
Okay.
with us is about being able to document the income, the assets, and then of course the credit portion, that DTI. What
Hmm.
we also look for, which you might not realize when we see the bank account, is for automatic payments. There might be an automatic payment that's not being reported to your credit report.
Oh, okay. Well, I got
Yeah,
a bunch of those: Hulu, Netflix,
yeah,
Showtime. What else do I have? You know what I mean.
I do know what you
It's,
mean.
it's a whole bunch of things that are coming out that aren't
Yeah.
necessarily showing up on my credit report. And so, are those things that are also being considered as far
Not
as the
necessarily,
DTI?
not necessarily your Hulu or your Netflix, but sometimes there are, other payments that are monthly recurring. Let's just say like a finger hut,
Do they still have
which might
that
get.
figure hut?
There you are. I was, I dated myself, but yeah.
I used to have a figure hut account years and years and years
No,
ago.
we all did. I couldn't wait for that catalog to come.
I used to love figure, but the catalogs were great to look at
They
all
were
the
great.
the
Christmas
jewelry and
time.
everything that was
My
in there.
grandma. Yeah.
Okay. So I'm ready to buy a house. I got all my ducks lined up. And then I get to the end and say, whoop, that's more than I want to do.
You get to the end?
Yeah. Before we get to the table, I say, that's more than I want to do. I don't think I can make it. I feel scared. I'm worried about something that's going to happen.
Well, first of all, that shouldn't happen.
Hmm.
And the reason why is because way in advance, we have a comfortability conversation and everybody understands what the numbers are on day one.
Okay, so you did say that before, that you
Yeah,
are very in
on
depth.
day one, after we get you qualified, you're going to get a loan estimate, and you're going to understand. Hey, I have $50,000 in my bank account, or I have let's just say I have $20,000 in my bank account. It's going to cost me $16,291.56 for me to buy this $250,000 home. Like you know your numbers. That's like I tell people, it's math. It's just math. Um,
Okay, so you said something that I didn't think of as far as asking you, but talk about the loan estimate. There are some things that must happen at a prescribed time within the process. The loan estimate is one of them. And then at the end or before you get to the end, it's the closing disclosure. Do you want to talk about those two things at all?
yeah, sure.
Explain
So
what they are and why they matter.
yeah, so in the beginning of the process, when you figure out the amount of home that you're going to purchase, after we review your assets and your income, we're gonna hone in on a purchase price.
Hmm.
Right? We're gonna work with your realtor as well as you and hone in on your purchase price. After you figure out the purchase price, we're going to create what's called a loan estimate, and that loan estimate is going to talk about what your monthly payment is, your principal, your interest, your estimated taxes, your insurance that you're going to be required to pay on a monthly basis. And the loan estimate is also going to tell you exactly what has to be paid in order for you to get into that home. It will break it down, and then we will review the loan estimate.
Okay, so this is a thing that's important right now. Last year in we missed that this year in May of last year, 2022, the city of Philadelphia did a mass appraisal of this of residential and commercial properties across the city. I hope I didn't say that in a redundant way. The city of Philadelphia did a mass appraisal for commercial and residential properties, and the average Philadelphian saw an increase of about 31%. I don't know if that was the median or the average, but I'm gonna say average because that sounds better to me. The average was 31%
Okay?
increase in the property value. Now we didn't do an assessment again this year because Mayor Kenny said, "Hey, we're going to slow down a little bit on this. Let's look around and see what's going on, and we're going to revisit this later because so many people." Uh, challenged the assessment that they received, and the organization in the city, the Board of Revision of Taxes, um, was inundated with appeal requests. So Mayor Kenny put a hold on making any other changes. But okay, assuming that in May of every year, they come out and say, "Hey, the OPA says, oh, we did another assessment and we're going to raise your rate again." Are you factoring in what the tax will be in the future, or is it this year? If that meant, let me see if I'm saying that, asking that question
It
right.
does make sense. So
Okay.
it's this year.
Hmm.
It's this year. There's two factors that can change in that 30-year note. One being the amount of taxes that are assessed and that
Hmm.
get paid each month,
Uh-huh.
and two being your interest, your insurance history, and whether or not your insurance goes up or goes down.
Okay, so yeah, that is the question I had because for some reason I just felt that a lot of people when they made that increase last year, it has to be published. The new assessments have to be published in the spring
Yeah.
of the year before they're going to do the assessment. I mean, to actually implement any increase or decrease, it has to be done in the spring before. Um, I felt like a lot of deals were going to get messed up because of that change. And I was wondering if it really did have an impact. Have you seen anything in your experience where someone who might have been able to afford the property before the tax increase just now isn't able to do it.
I have not seen that yet.
Hmm.
Now I've received plenty of phone calls on,
About
hey,
it.
why did my payment go up?
Uh-huh.
Yeah,
Because of the taxes.
I received a few phone calls. I'd say about 2, 3 months ago.
Okay.
Yeah.
Because it's I have the homestead exemption. Any person who lives in a property, and it's their primary residence, they live there, they can apply for a homestead exemption, which is not based on your income. And so right now, I think the city is reducing the tax liability by 80,000. I'm confused now because Mayor Kenny said 65,000 before, but then they ended up doing something different. So I'm going to say 80,000. Your house is worth 200,000. Take 80,000 off, 120,000, and then they're going to do um, the tax assessment on the $120,000 value in order to come up with your tax bill
Hmm.
for the year. And so it was interesting to me that there was an increase. There are a lot of opportunities for people to make out. I was just wondering if you noticed that there was anything happening. People were missing deals because of that tax increase. So, what thing would you tell us right now that we should pay attention to in the coming months? A lot of people, like you said, are waiting for the interest rates to go down. Is your perception that that's not going to happen? So, what things should we do next as far as looking for a mortgage,
Yeah.
buying a house, whatever? Is this a good time to buy a house, or what should we do?
So the answer is yes. It's definitely a good time to buy a house.
Hmm.
I don't. People were thinking that we were going to get a significant retraction. We didn't get it.
Hmm.
The prices are where they are. This is the new watermark. They're not going to go down another back $50,000. We're just there yet. We're just absolutely there. So if you are someone that's interested in purchasing a home, find a home and get in, because next year, yeah, they're going to be up even more. It's the one thing that has continued to grow over the last 80 years is real estate.
Hmm.
Yeah.
So to get your house if you're going to get it. Is that
Yeah.
what you're saying? Okay.
Get your
So
house. As far as interest rates are concerned, if you're concerned interest rates are high and you think they're going to go back, still find your home, and then you have the option to refinance in 8, 9, 10, 12 months. Actually, at this point, it's 12 months because they changed the rule. So
okay.
you have to wait 12 months in order to refinance.
Okay.
It used to be 6 last year, but now you got to wait 12 months.
Mm, okay. So if you're just tuning in, you are watching In the Know with Robbie Coe. My name is Robin Aluko. I am a real estate agent, insurance agent, and public notary in Pennsylvania. And our special guest today is Mr. Teddy Pendergrass II of Cross Country Mortgage. When we come back, we're going to find out how we could get in contact with Mr. Pendergrass in order to place a mortgage application. Now, I've been posting his
All right.
website all over the internet, but get your pen and paper together. When we come back, we're going to do just to wrap up with Mr. Pendergrass, find out where he is and how you can get him, apply for a mortgage, get all of your paperwork together. He'll talk to you about what to do. We'll be right back after this message from our sponsor, Robbie Coe and Associates LLC. Thank you.
Do you know how to protect what matters most to you? At Robico and Associates, we do. Whether a new or existing business owner, you'll benefit by scheduling an insurance review with us. We offer all insurances, from business and key person to voluntary benefits like vision, dental, and cancer insurance. We don't just sell, we educate. Contact us today. We'll help you protect what matters most to you and your business.
100% correct. We don't just sell, we educate. So, and Mr. Pendergrass, I am so thankful that you took time out of your busy schedule to meet with us today and to share your knowledge and expertise about home mortgages. Please tell everybody how we can get you, your phone number, email, whatever it is that you want to give us. If you're on social media, tell us about that too.
Yeah. So, very simple. Just call me.
Call me
Call me. Great
if
song,
you
right?
need to get a mortgage.
There you go.
Call me, satisfaction guaranteed. Is that good? I can't sing, sir.
Listen, I'm going with that. I'm rocking with that. Yeah.
So, what's the number people should call to get you?
Yeah. So you can reach me at my office, 215-422-3200.
One more time.
215-422, actually 3300. I have two numbers, but call me
215-422.
3300.
Okay, is there an extension?
101. It'll come right to me.
Okay, I'm going to put it on a banner that's going to make it scroll across the bottom of the screen. I lost it. 215-442.
215-422.
422, sorry.
3300.
Okay, thank you. Extension 101.
That's it. Yep.
All right, thank you, sir. I appreciate your patience. I pressed the wrong button and erased what I was putting down there.
Love it.
So there it is. This is the telephone number. Is that right, sir?
That's it.
Okay, there we go. So I really appreciate your time and attention. If there's any final thing, any final thought that you want to offer right now, I'll be glad to take it.
So final thought would be, if you are interested in purchasing a personal home, or if you're interested in being an investor, we can definitely help you.
Mm-hmm.
That's it. Go get them.
So your office is in what part of town? What is that? Fairmount section? I can't think of it.
Right outside of Chinatown, 10th and Spring Garden.
Okay. And so are your appointments typically handled over the phone or in person? How do people do that?
Some people prefer in person, some people prefer over the phone, and some people prefer over Zoom. I do it. It doesn't matter. We figure it out.
Okay. And just one last question, sir. What differentiates your company and your team from another team? You said before that there are other great companies out there, but why should we choose you?
Why?
Okay. Why should we choose you?
Because we're actually in it to help people.
Mm-hmm.
I think, people do business with people who they know, like, and trust.
Sure.
Who feels though has their best interest at heart. So, that's always been my heart, and that's always been that's how I run my team. I mean, we look out for you. We figure it out. We love everybody that, again, be a paper, but then there's some people that need help. And if we're not in this world of helping people, then what are we doing? I mean, that's it,
So that's one of the reasons why I'm doing this show. I used to have a radio show. I don't know if people remember the Delilah Robbins Show at 106.5 FM. I loved doing that show. We talked about everything. It was a music show, basically.
Okay.
But we talked about different issues that Philadelphians face, or just people in general that are having challenges with all across the country.
Yeah.
And it was something that I really enjoyed doing. It was like a community service thing for me. And so here with In the Know with Robbie Coe, I'm doing this because I want to highlight a mortgage professional that I think is fantastic. But at the same time, I want people to have a better understanding of what it is that they can expect when they begin to go through the home buying process. It's not just about choosing a real estate agent. You have to make sure that every person that's on your team is able to work together in order to get the outcome. And that is that you're sitting in your backyard, drinking your Bud Light or your Corona beer, smoking your cigar, whatever you do in the backyard with the grill with the grill going, and that everybody is satisfied with the outcome. And so you need a real estate agent, a mortgage loan officer, insurance agent. You may even need an attorney to help you to understand some of those papers that you're going to be looking at. I know that when I signed did the settlement, I had a stack of papers about this tall. I must have signed my name like 100 times. It felt like it.
Yeah.
That's
Yeah.
what I was doing. So there are a lot of papers involved with the purchase of a new home and many years of happiness. Now, I can't say enough how proud I was when I got the key to my house. Like when the person gave me the key, if I saw confetti and balloons and fireworks going off inside the room. And it was amazing to me. So I can imagine that other people have a similar feeling as well.
Yeah.
If you are in the market for buying a home and you need a mortgage loan officer, look no further. Please contact Mr. Teddy Pendergrass and his team at Cross Country Mortgage at 215-422-3300 extension 101. I want to thank you very much for watching our show today. We'll be back next week with Realtist Joanne Bourne. She is the owner of Bourne Associates LLC, and we'll be talking all about navigating the real estate home buyers process with a real estate agent, what things you can expect if you're an investor or a first time home buyer or a second time home buyer. Like you could have had a house before and you say, okay, it's been a long time. We're doing it again. Some things may be different now. Some things that she'll need to, or any real estate agent will need to walk you through. Tune in next week, July 6th at 1 o'clock, right here at In the Know with Robbie Coe. I want to thank you
Right.
again, Mr. Pendergrass, for dropping in today. Are there any questions or final thoughts? I know I said that like already, but something might have came up. You said, okay, whatever. Let me tell her this one last thing. Follow us on social media. I'm Robbie Co Services at Twitter and Instagram, Robbie Co Associates. What about you, sir? Teddy?
On social media. Teddy Pendergrass. Find me. I'm there.
Okay, he's there. So check it out. Thank you again for watching. We'll see you next week. Thank you, sir, again. Have a good day, all right?
Thanks, guys. See you later.
Okay, bye-bye.
Bye.
Uh-oh.